Assalamualaikum warahmatullahi wabarakatuh. Today I want to explain about the topic the trend of exchange rates in Malaysia. My group consists of three people including myself, Nur Jazila, Ahmad Bahaki and Zuhaira Nasrin. First of all, I want to explain about the introduction. Okay, the exchange rate trend in Malaysia refers to the movement of the value of the Malaysian currency ringgit Malaysia in relation to other currencies. The exchange rate can be affected by a variety of factors including economic condition, government policies and international events. In general, the exchange rate trend in Malaysia is determined by the supply and demand for the Malaysian ringgit in the foreign exchange market. When there is high demand for the ringgit, its value will tend to increase in relation to other currencies. Conversely, when there is low demand for the ringgit, its value will tend to decrease. Okay, move to next slides. In these slides, I want to explain about the factors that affect the exchange rate. The first one is political stability, next government policies, international events, natural resources, economic conditions, and external factors. Okay, from these slides, I want to explain about the analysis of United States dollar to Malaysian ringgit for the year of 2017. Okay, during 2017, the exchange rate of MYR against the US dollar USD remained relatively stable. According to this data from Bank Negara Malaysia BNM, the Central Bank of Malaysia, the average exchange rate of the MYR against the USD in 2017 was 4.28 MYR per USD, which means this was slightly lower than the average exchange rate in 2016, which was 4.30 MYR per USD.
Next, I will be talking about the next part for the analysis, which is the average exchange rate in 2018. Based on the graph shown above, these are the several factors that affect the exchange rate in Malaysia for the year 2018, including global economic conditions, political factors, monetary policies, and market speculation. The first one is the US and China trade war. Malaysia's exchange rate has been impacted by the ongoing trade spat between the United States and China, which started in 2018 and has since intensified. Changes in the US and China's trade policies could have an impact on exchange rates because they are two of the world's largest economies and significant trading partners for many other nations. And the second one is changes in monetary policy. Changes in interest rates or other policy measures may have an impact on the currency rate. The Central Bank of Malaysia, Bank Negara Malaysia, establishes monetary policy for the nation. For instance, if the central bank boosts interest rates, it might draw more international investors, which might lead to an increase in the value of the Malaysian currency. Next is market speculation. Market speculation, which occurs when investors and traders purchase and sell currencies based on their projections of future economic conditions, can also have an impact on exchange rates. Next is political factor. The Malaysian ringgit currency rate may have been impacted by the general election that was held there in May 2018. The exchange rate of a nation's currency can frequently fluctuate as a result of political unpredictability because investors may be wary of doing business there. A coalition led by the Pakatan Harapan Party toppled the incumbent government in the general election in May 2018. The ringgit currency rate may have experienced some short-term volatility and uncertainty as a result of this shift in the government. Next, I'll be talking about the exchange rate in the year 2019. Based on the graph shown above, there are many economic conditions that can affect the exchange rate of a country's currency. Some of the economic conditions that may have affected the exchange rate of the Malaysian ringgit in 2019 include the value of a nation's currency that can be impacted by government debt or the sum that a government owes creditors. Investors may view high level of government debt as a warning sign, which may reduce demand for a nation's currency and result in a decline in the value of the currency. First, Malaysia's government debt as a percentage of GDP was 50.8% in 2019. According to information from the International Monetary Fund, IMF, on a worldwide perspective, this was nevertheless regarded as being quite modest even if it was higher than the government debt levels of certain other nations in the region. The major credit rating agencies have rated Malaysia's debt as an investment grade because of recent efforts by the Malaysian government to lower its debt levels. Next, the demand for a nation's currency can be impacted by the balance of the trade between the nation and its trading partners, which in turn can impact the exchange rate of a nation's currency. A country with a significant trade surplus may experience an increase in its exchange rate, as more people want to buy its exports, driving up demand for its currency. In contrast, a country with a significant trade deficit can experience a decline in its exchange rate because of falling demand for its currency. Based on the graph shown above, I'm going to talk about the exchange rate in 2020. The ringgit Malaysia has been climbing since the starting of January until February. From there, it climbed steep to March. But on March 2020, the Malaysian government had to choose to executing movement control orders to prevent the spreading of COVID-19. COVID-19 was a new virus that has been spread to the worldwide and brought terror to its name on 2020, especially Malaysia. On 25th of January 2020, Malaysia was shocked by the first ever recorded case of COVID-19 by a passenger from China. While on 4th February 2020, first Malaysian were recorded having COVID-19, which to an extent, Malaysia declared Movement Control Orders (MCO) on 18 March 2020. This which causes the value of Ringgit Malaysia RM to plunging down at the start of April to May and until June, which on June was slight drop and been on continuing depreciation until September, which it has been slightly climbed for October and dropped down from there until December.
USD to RM monthly average exchange rate for 2021.
As shown in the graph above, in January it has little climb in February, while from there is a steady rise toward March. From there is a late drop from April to May. Starting for June, Ringgit Malaysia be climbing up high until from July. The so of Ringgit Malaysia was at the higher peak from the period in August until it is dropped in September and be making consistent climb in October up to December. And global experience has demonstrated that this may result in a dangerous accumulative of financial imbalance. 26 US to RM monthly average exchange rate for 2022. According to the graph, Ringgit Malaysia is picking up, which is left in the December 2021 and continue to 2022. For the Ringgit and Bursa Malaysia, appears positive due to a decrease in the trade of a pandemic in the effort reopening the national economy and ending the COVID-19 pandemic. And the trade was a stable and positive outcome. The keep a rise above, indicating that the effort was worth. One of the cause of the drop is the trade could be because of the election period that took place in October and lasting until November, but also ended up with the US dollar value is straight. Conclusion: the exchange rate trend in Malaysia is determined by supply and demand of ringgit of the forex exchange market, economic indicator, government policy stability, natural resources, external factor, capital flow, and expectation can all affect the exchange rate. Important to note, the exchange rate is a dynamic and complex process that can be affected by many factors and can change rapid, making different to predict. Understand the broader context and multiple factors that influence the exchange rate can help provide a clearer picture of the trend.